It's been a pretty long time since I've given you an update video on Tesla stock, and since then, a lot has really happened, both good and bad, but especially bad. And more recently, the stock has really been cratering because of not just the broader stock market crash going on, but also because of some company specific issues that I want to discuss with you in today's video. In fact, I actually made some moves on the stock myself. I actually cashed in some profits and tried to lower my exposure to Tesla for several reasons that I will also discuss with you today. Having said that though, Tesla is still one of my largest investments in my portfolio. So I'm going to share with you the reasons why I'm still holding on to some shares, but why I also sold some. And I'm going to try to give you an unbiased view on Tesla stock with a long-term perspective, both the kind of bearish thesis and the bullish one as well. And I hope you guys can appreciate that. It should be a fun one. I hope you enjoy it. But with that said, we got a few things to cover here, so let's just jump straight into this. All right, now let's just start by taking a look at the stock and then we'll go from there. So just in the past 3 years alone, Tesla stock went from being around a $10 stock to a high of over $400, which is mind-blowing of a gain of over 3,400%. And even after the recent crash, which we'll also cover in just a second, Tesla stock is still trading at $238 a share, which is still a massive gain of about 2,000%. Now, as far as my personal position goes, I bought the majority of my shares when it was super low, so my average cost is only less than $15, which means I'm still up over 1,500% as of today. However, I actually sold some of my Tesla shares around the end of last month for over $300 each, which was a profit gain of close to 2,000%. Now, before any bulls go off on me, that does not mean that all of a sudden I am not a believer in Tesla. I just have some concerns that I think are valid, and I had a position in Tesla that was already the second largest stock in my entire portfolio at around 15% of it, and I was up on that position by around 2,000%. So I just wanted to lock in some profits and trim it down a bit. Now today, it's the third largest stock of my portfolio and worth a much more reasonable around 10%. And I actually want it to be in the single digits. That's where I'd feel the most comfortable kind of being exposed to Tesla. But the stock has been falling a lot on its own, so I might just kind of wait and see if it gets down there by itself without me having to sell, a lot more shares. But having clarified all of that, why am I not as confident in Tesla as I used to be, and why did I lower my exposure to it and lock in some profits? And on the other side of the coin, why am I still holding on to the rest of my position, and why do I still believe in their future? Well, let's go back to Tesla stock for a second. Now, as you can see, it's been getting destroyed this past year, crashing by over 40%, almost half their entire value. And in my opinion, some of this is warranted, but some of it isn't. Some of the crashing is simply because the broader stock market is dragging it down, as the tech-focused NASDAQ, where Tesla is listed by the way, has already fallen by over 30%. And this isn't exactly the fault of Tesla, it's just the environment that they've been forced to operate in with rising inflation, rising interest rates, a bad economy, and multiple production halts because of the pandemic lockdowns, not to mention all the supply chain disruptions and the chip shortages that have plagued the entire industry, much of which has even resulted in Tesla raising their prices across all of their entire lineup by literally thousands of dollars each. The Model 3, for example, is now costing a whopping $47,000 just to start. I don't know about you guys, but I remember a time when Tesla was originally planning to sell the Model 3 for as little as $35,000. That's over $10,000 cheaper than where it is today. And don't even get me started on the Model Y, which was supposed to cost less than $40,000, but today sits at over $65,000 to start. That's over $25,000 more expensive than what was originally planned. Again though, that's not really the fault of Tesla. In fact, most other electric vehicles out there are priced at similar levels. So I'd actually be fine with those higher prices if that was my only concern with Tesla stock. But unfortunately, it's not. There's actually a few more issues that I think are actually a little bit more serious that I want to run through with you as well. The most obvious of which is probably the rising competition. When Tesla first started out, they were a bold, revolutionary company that was trying to disrupt the entire automotive industry with something that literally nobody else was doing: Fast forward to today though, and that is clearly no longer the case. In fact, I could just throw some really quick examples off the top of my head. Now, domestically, for example, you have American car maker GM, who is spending $35 billion through 2025 on electrification, which, by the way, also includes investments into autonomous driving, which is another area that Tesla has always held a considerable lead. But through their Cruise subsidiary, GM has already become the exclusive autonomous rideshare provider to the city of Dubai, while also being recently awarded the first ever regulatory approval from California to provide AV rideshare services to the public there as well. Ford has also been betting big on EVs through their iconic brands like the Mustang and the F-150 truck, which has long been the best-selling pickup in the world. And even internationally, you have companies like the European car maker Volkswagen, who is spending a monumental $100 billion on EVs. In Japan, you have Toyota spending another $35 billion, just like GM. And in China, you have a number of Tesla-like clones popping up, including NIO, XPeng, and even more experienced legacy makers like BYD. Apart from rising competition, though, you also have issues with delays. You have the Cybertruck being a prime example of that, as it was originally supposed to start production in 2021, but has since been delayed to next year. There was also supposed to be a mass market vehicle priced at only $25,000, which was dubbed the Model 2, but that's also been delayed indefinitely because Musk said that the company is too busy working on other things right now, which one of those things is the Tesla robot. And by the way, that brings me to yet another concern, which is the Tesla bot. Originally, I thought, okay, cool, Tesla is trying to be innovative and they're working on these robotic machines, maybe on the side so that they can have a head start on everyone else for the very long term. But, they'll still be doing their core business and operating as normal. But if you're telling me that the Tesla bot is now a high priority to the point where it may even affect their work on a cheaper mass market vehicle, and at the same time, in their recent AI event, they show off the robot as being this like walking pile of exposed wires and mechanical parts, and then you tell me that it's priced at somewhere under $20,000, so basically the price of like a cheap car. I mean, it's even close to that $25,000 car that we just talked about that, never came to fruition. Yet Musk said recently that the robot will probably be an even bigger business than their car business. I mean, I'm just not sure that I'm understanding Tesla's vision here. I mean, I'm not trying to knock on the Tesla bot. I think very long term, very, very long term, there could be a very large market there, and it might be advantageous to Tesla to start developing that technology right now and get a head start on it before everyone else. I could see that being a possibility, but I don't think that that should come at the cost of what you're doing today and give your competition the ability to start catching up to you. Because I personally can't think of a single person out of everyone I know. I don't know about you guys, but I can't think of one single person that would spend up to $20,000 on a humanoid robot, especially right now. Like, let's face it, the first iteration of this is probably going to be severely limited. And I can't think of a single person that would buy that, let alone not just 20,000. I can't even think of someone that would spend 15,000 or even 10,000 on a humanoid robot. But I can think of so many people, practically everyone I know would definitely want a cheaper Tesla vehicle. If you have a Tesla vehicle at 20,000, 25,000, I think that thing would sell like hotcakes. But instead of that, they're going to buy a humanoid robot. I just don't see it. I don't see it happening. And so I'm not the biggest fan of this. Now, maybe I just lack the vision. I could still forgive a lot of this stuff and just think, okay, Elon Musk is usually right about this kind of stuff. Just trust him long term and just trust the plan and invest in the stock anyway long term. But you have to keep in mind all of these issues are within the context of my biggest concern with Tesla stock. That is that it is pretty expensive of a stock for all of these issues that you've got going on. Because even after the stock crash, Tesla is still trading at a PE ratio that is over 600% more expensive than the sector. Now, forward PE does dramatically improve, but even that is still 300 to 400% more expensive as well. That forward growth, though, is really Tesla's saving grace, as their forward PEG ratio, the price to earnings to growth ratio that factors in future growth for the next 5 years, well, that's much cheaper at close to 1, which is not only a good value just on its own, but it's also even cheaper than the rest of the sector by almost 10%. And that's really the thing about Tesla versus the competition. That's what sets them apart, is that really high growth. Yes, it's super expensive of a stock right now, but over time that valuation gets better. And so if you were to ask me, why are you still holding on to your shares, right? I'm up like 1,500%. Even after the crash, I'm still up this huge amount on Tesla stock. It would be so easy for me to just cash in those profits, cut and run, and just never look back. But I choose to keep holding on to some Tesla shares long term. And if you ask me why I'm doing that, well, I can just give you three really quick reasons right now. Number one is going to be their performance against the competition and their growth. At a time when most other automakers are seeing their business stall or even decline, Tesla is absolutely on fire. I mean, looking at EV sales, you have to ignore the blue bars here because those are hybrids, but in terms of fully electric vehicles, the Model Y and the Model 3 still completely dominate the market, with the only other company that even comes close is BYD, which is a Chinese company, and most of their best sellers are actually hybrids. But outside of China, there's really nothing else on here. I mean, I guess Volkswagen is doing okay with their ID4, but it's still not really that close. And even the Ford Mustang, which has been out for a while now, I mean, wasn't it even out like almost the same time as the Model Y? I think it was kind of close. And it doesn't even make the list on here. And speaking of competition outside of China, I mean, just look at the past 4 years against domestic rivals. From 2018 to this year, 2022, Tesla has skyrocketed their sales by over 300%, while GM only grew by 3%, and Ford actually fell by close to 10% negative. And if you're thinking, yeah, but that's because Tesla was smaller and now these other companies are getting back to higher growth for the future, well, that's not really the case, at least not compared to Tesla. Next year, Tesla is still expected to put up revenue growth of over 40%, while GM and Ford are still expected to be in the single digits at 7% and 8% growth respectively. And speaking of size, guys, it's not like Tesla is this tiny company anymore. Next year, they're expected to do over $120 billion of revenue, which is just a bit shy of the other two companies. In fact, if we use the same growth rate as that year for all three companies and factor it into the following year of 2024, Tesla will actually be generating more revenue than either of those two legacy giants. That's pretty freaking crazy. It's incredible how much Tesla has been able to grow in such a short amount of time. And that's a lot to do because of, rising gas prices. There's huge demand for EVs right now, and I think that's a big tailwind for a company like Tesla. Now, reason number two, it's not just sales that are growing, but they're actually growing their profits too, and Tesla tends to have superior profitability over the competition. You would think that after all this time, these legacy players would have developed like amazing margins, but Tesla is actually destroying them on margins, and it's not even close. Around the start of this year, Tesla reached operating margins of nearly 20%, while legacy automakers were still well into the single digits. Literally, the only automakers that I know of that have better margins than Tesla are extremely expensive luxury brands like Ferrari. And going forward, the profit gap is likely going to get even worse for these legacy players who have to invest all their money and resources into converting their ICE infrastructure into EV cars, which is going to squeeze their margins even more. In fact, forward EPS growth for the next 5 years has Tesla at 55% growth on average, while GM and Ford are only at around 15%. And that's mostly because these companies were struggling huge in the previous years to begin with, so it's much easier for them to put up higher growth now. Because in the previous 5 years, Tesla was still doing over 80% growth, while the legacy players were flat or even negative. Which brings me to my last bullish reason, and that's that while legacy players kind of sit on their thumbs and are too scared to innovate, Tesla goes all in on future innovation, which is why they've built such a large head start in the first place. And they're still doing this with things like their Tesla Semi that will be huge for the logistics market. That is a market that is already worth, trillions of dollars. There's the upcoming robotaxi service that, in my opinion, is actually ahead of all the competition because of really all the Teslas that are already on the road collecting data for them, including over 100,000 of them, by the way, that are in the full self-driving beta. And That I think is also going to be a gigantic market in the future with very high growth. There's Tesla Energy and Storage, which continues to be worked on and achieved record high sales last quarter. There's innovative and radically different designs like the stainless steel Cybertruck that already has over 1 million reservations and maybe even more than 3 million by some estimates. And of course, there's also the Tesla Bot, which I'm not a big fan of myself, but over the very, very long term, that could also be a large market, especially in the workforce and services markets. And by the way, many of these things that people are saying are too radical for the consumer mass market right now are things that Tesla may still be able to sell to the workforce or even use themselves. In fact, the Tesla Semi, they use that for their own logistics to transport vehicles. Energy and battery storage they use themselves. They also sell it to car customers so that they can charge their vehicles at home. There's a lot of cross synergies there. Their autonomous driving functionalities and their platform, they use that for the robot, so it makes it easier to develop the robot. The robot itself has been demonstrated to be able to operate functions within their own manufacturing facilities, and it can even do some office work for Tesla too. And their Dojo platform, the AI platform, they're even talking about leasing that out, some of that technology out to other companies to implement there as well. So there's so many different things that Tesla can use all of this, kind of radical technology or this innovative technology to generate more revenue and income, and especially over the very long term. So that's why I still like it. That's why I still want to hold on to some shares. But Tesla stock at the moment is pretty expensive in relation to some of the stuff that may be a little too forward looking. So that's why I think that it's just a safer play to cash in some profits, which I've done to lower my exposure to Tesla. But I also still want to hold on to some shares longer term, because there are still some things that I like about them. So anyway, those are just my thoughts. That's what I've been doing. I just want to be transparent, let you guys know and update you guys with it. So I hope you appreciate that. I hope you enjoyed the video. Let me know down below, what do you guys think? How do you feel about Tesla? Do you have any shares? Is it too risky? I completely understand that, by the way. It is a bit of a risky stock, but do you like it? Do you not like it? Give me your reasons why. We'll have a chat down in the comment section. But I hope you enjoyed the video. Hit the like button if you did. Subscribe if you haven't already. Really helps the channel. But I will catch you in the next one. Hope you're all doing well. Take care. Bye-bye.